Today, the U.S. Department of Justice announced a lawsuit alleging that Visa is a monopolist. They claim that the company has been involved in anti-competitive tactics to control the debit transactions market. Following the news, Visa stock fell 5.49%. This lawsuit comes right after Nancy Pelosi sold around $500,000 to $1 million of Visa stock just a few months ago. It's funny how that continues to happen. Even with today's fall in stock price, Visa stock is still higher though by 5% compared to when she sold. In today's video, I'm going to break down the DOJ lawsuit and explain what it means for those investing in Visa stock. As many of you know, Visa is one of my top holdings in my long-term dividend growth stock portfolio. This is the account that I regularly update every single month on the channel, and I know many of you in the audience own Visa stock as well, so this is some pretty important news. I own Visa stock due to their scalable, high-margin business model with a wide economic moat. Visa is a free cash flow machine, which leads to high dividend growth and large share repurchases for investors. But I have long said that Visa's dominant market position is actually one of the bigger risks for the company, and that risk comes from potential lawsuits like this. But is this lawsuit actually that big of a deal? I'll dive into that and finally explain why it may be time to buy the dip on Visa stock if it continues to fall from this price. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoy the video. Please sign up for my free email newsletter if you want help finding better dividend stocks. There you'll get breaking news on dividend raises and cuts, and on top of that you'll get important stock market news around companies many of us are invested into, like Visa. So I listened to this entire press conference where the DOJ announced the lawsuit so that I could fully understand it for this video. And it was actually a pretty interesting listen to kind of understand their perspective. And the most obvious critique I have around this is that they should have included MasterCard in this lawsuit. And I think the case would have a lot more merit if they did that, because every single tactic brought up by them is something MasterCard does as well, and they really more act as a duopoly in the payment transactions market. The other interesting point is they're not actually focused on the amount of the fees being paid, and they did not even allege that Visa is raising their fees to an unjustified level, and that's because they haven't. Visa has actually acted pretty conservatively into keeping fees low, and that's partly because they have been under the watchful eye of the Department of Justice and FTC. And Visa, I will agree, does have a dominant market position, so much so that they could hurt consumers and merchants by raising fees, and there's really not anything that they could do about it. But Visa is not doing that. Instead, the entirety of the antitrust lawsuit is around anti-competitive tactics, and it's specifically focused around the debit card market. And they go on to basically explain, now in a very negative tone I might add, how Visa operates and their partnerships and client incentives they offer. And a key part of what Visa does to maintain their market position is what they call client incentives. In fiscal 2023, they paid out $12.3 billion in client incentives, which is paid to financial institution clients, so like banks like Bank of America, JP Morgan Chase, etc. It's also paid to merchants and various business partners. And basically, Visa spends this money in order to make sure that people operate on the Visa payment network. And that could be through banks issuing cards on the Visa network or making deals with Fintech companies to operate on the Visa payment network. And the important point to bring up here is that MasterCard does the same exact thing. This is common sense business practice. Now, they spoke very negatively about how anti-competitive some of these deals can be that Visa makes with these financial institutions. And they go on to basically accuse them of threatening and strong-arming these companies, using their market position to basically guarantee that they continue to be carried by these financial institutions. And I do think it's believable that there probably are some examples of anti-competitive tactics used in this manner. But I would go on to say the overwhelming majority of these client incentive-based deals, which I have seen, even with smaller fintech companies, are usually win-win partnerships. They are voluntarily agreed upon by both sides. This is similar to how Google pays Apple $18 billion a year in order to be the default search engine on Apple devices. And in my opinion, this is a win-win deal where Apple is happy because it's found money and they're not even trying to compete in search. And Google is happy paying that large sum because they'll make it back on the advertising. Now, I'll give the DOJ credit in that this is a consistent standard they are now applying across the industries, because there's now a Google FTC lawsuit alleging they are a monopoly, and part of that is based on this Apple-Google payment. But I really don't think this is where the consumer harm is happening. If we were purely focused on consumer harm, the obvious target here is the Apple App Store, which has 30% fees. It's absolutely insane. And if the DOJ wants to continue their targeting of quote-unquote middlemen, then this would be the most obvious example where it's harming consumers and small businesses. Compared to those large examples, the fees on debit cards and credit cards are not even notable. And let's not pretend that the alternative of using cash doesn't include fees as well. The cost of handling cash at retail stores can be significant, ranging from 4.7% to 15.3% of the value of the cash transaction. That is far more than what Visa or MasterCard are charging. And the DOJ is also only focusing this around debit rather than credit. And it seems like the main reason for that is because they think that targets the lower end consumers more, which is true that more poor people couldn't get credit cards in a lot of cases. However, I find it deeply disingenuous. And throughout a lot of this press conference, they were tiring it to a broader political message around lowering costs for Americans, and in some cases implying that companies like Visa are part of the inflation problem, which I think is just absolutely ridiculous. The idea that fees have gone up and that's a reason for inflation is not even remotely true. These fees have been present in the American economy for decades, and this is not a new cost introduced into the system. And I'm sure you can make the argument that over the past 50 years, the introduction of Visa and MasterCard and the greater accessibility of digital payments has actually lowered costs on both merchants and consumers. And let's not forget that Visa actually does face competition in Fintech in the past 15 years. This is from new internet native Fintech companies and also cryptocurrencies. And both Visa and MasterCard have taken the approach of being proactive and making partnerships with these companies. And from their perspective, that is the smart thing to do. You would be stupid to not do that. But the DOJ in this press conference specifically called out the phrase partners that they use as though that's some negative thing. So anyway, in general, I think a lot of this case is a little bit of a stretch. And hey, I live in the United States. I don't want Visa or MasterCard charging outrageous fees, but I don't really think they're doing that so far. And if this case is successful, they actually do not have any idea what the potential remedy would be yet. Is not focused around the fees they're charging, so I don't know if there'd be new regulations forcing them to lower fees. Instead, it's more focused on the anti-competitive tactics, so they might want to just open up and allow more competitors to Visa and MasterCard, so that may have an indirect impact. But they did mention that there could be a potential settlement paying for consumer and merchant harm, and there actually has been an ongoing lawsuit with both Visa and MasterCard over swipe fees to merchants, and the most recent $30 billion agreed upon settlement just got rejected by a federal U.S. judge, so they might be looking for an even higher dollar amount in the future. Who knows? But if we put this into the spin zone back to focus on investing, I'm glad that the DOJ recognizes the competitive advantages that Visa has, because I think they're pretty obvious. And that's a large reason why I invested in the stock. Visa's revenue per share is growing at a 13.4% 10-year compound annual growth rate. They have 80% gross margins and 54% net margins. Free cash flow per share has grown at a 25.7% 10-year compound annual growth rate. The Visa dividend has grown at a 17.92% 10-year compound annual growth rate. Payment is extremely sustainable at a 20% payout ratio based on both free cash flow and earnings per share, and they're regularly buying back large amounts of stock. Visa has an extremely strong business model and market position, and they don't need to raise fees on transactions in order to continue growing. Data processing revenues, which is those transaction fees, is down to 35% of their total revenue. They do not need to continue raising fees. Visa has the tailwind of a large transition to digital payments, and this tailwind will continue to fuel growth at Visa. Analysts are projecting 10 to 15% growth in earnings per share over the next 5 years. By fiscal 2028, they're projecting $17.24 in estimated earnings per share. That would give it a 15.8 P ratio based on current prices. The consensus price target among Wall Street analysts is $290.80. And based on today's fall in stock price, that makes the stock 6.61% undervalued. And based on every financial metric, Visa is an extremely strong company and investment, but there is still this clouded risk around potential lawsuits. And Visa has faced pressure already from the DOJ and FTC, such as their acquisition of Plaid being blocked a few years ago. And I'll tell you about one thing I don't like. I don't like the double standard around Visa and MasterCard in terms of enforcement. MasterCard seems to be allowed to make far more acquisitions where Visa is not, even though they're basically a duopoly. With all this said, I'm going to use the negative sentiment around Visa stock regarding this lawsuit as a potential buying opportunity. If Visa gets down in the $260 range again and below, then I will likely add to my position. After all, this lawsuit may disappear in a few months as we have the potential of a new administration and Department of Justice. It's election season, everything's political, and will change. If you enjoyed the video, leave a like, subscribe to the channel, and I'll see you next time. And again, if you want to find better dividend stocks, then please sign up for my free email newsletter, link in the description and pinned comment. Thanks for watching.